Hi everyone, this is my first time making video about stocks, so if I say anything or do anything wrong, let me know. So yes, my trading strategy right now currently I'm doing is just buying high of day break or ABCD pattern sometimes, but normally if pre-market I see a stock gap up like Roca today, I would buy it. I would not chase it. If you buy it in here around here, this first few candlestick right here, you basically chasing a stock, and you would not know when it's gonna stop. Like this one right here, top out right there. You're not gonna know that if you're gonna go continue downward or can continue going up. So normally I wait for it to consolidate. So here where it's consolidate, and when it break out right here, I would buy it right there. And after that, I'm gonna wait for it to spike. Normally I sell into spike. I don't like holding stock because I do not know how far it can go. So yeah, after that it go up here, go down, then I sell during in this spike this morning right here. Yes, and make a little bit around 12% profit. Yes, I know I miss out a lot of this, but think about it. If you're actually in the stock, right, and it pop up to 175, and all of a sudden it dropped back down to 135, that's like 23% drop. Yes, I do not like to hold through those. It make me feel really bad. Once you were winning and all of a sudden you lost all your money. And yes, and if you buy anywhere here, it's kind of chasing. I do not like that. I like some consolidation before I actually buy it. So I did not buy anymore right here. I just watched the stock go. Yes, it feel really bad watching the stock go this much. See how much you could have make more, but you just had to deal with it because sometimes the chance of winning is much higher. I do not like to take risks. 12% is great for me already. And yes, so right here is consolidate a little bit more around here. I rebuy it once it break right here at 130. I got in at 132, and I saw a spike. This time I try to be patient, but guess what? It pulled right back. So right when it pulled back, I'm waiting for it to spike and just to sell it and get out. So I got out at 245 and got another around 6% profit. So yeah, not too bad. So yeah, that's my day for today. I'm not sure can I spike more for Roca, so I would not buy it or anything right now. I'm already out of day trade. Yes, I'm still under pattern day trading rules. And normally, I do not like to buy anticipation of breakout because a lot of time it's fake. It's a fake out. Like for instance, I would buy like CLNT yesterday. Yesterday I was taking my dad to doctor, so I wasn't able to play pre-market. But I would buy. If I see this gap up yesterday, and if I saw that it break out of 5.1, I would buy it. I would buy it right there, and probably sell it when I get 10 to 12%. But yeah, it go all the way up. So normally high if they break, you got a really good percent chance of winning. Wait, am I recording? Okay. So you got really high percent chance of winning. Like, let me see what other stock before that first high if they break normally is really strong. Let's see, especially if the stock is the first day. I normally only play first day gap up spike. I do not like to play the second day because normally the second day got a lot of short in it that people want to anticipate that it will go down. So there's a lot. It's harder for people to buy. Just psychology thing, I feel like. Yes, I was able to find another example of just a couple days ago that I play it. It was on the 5th, and yes, CDNA. I bought it at when it's the stock gap. So the stock gap up and do some consolidation right here. I buy it when it break out of right there at 5.65, and from there I just sold into spike right when it hit around like 4.5. I remember I sell around 4.5, which is no 0.35 because I know it's 5 cents up from the high. I feel so glad because that's the reason why I sell into spike, because like this stock right here, right after it hit that 6.4, it dropped right back down, and then I do not want to hold through the emotional roller coaster kind of thing. So yeah, so I just sold into spike, take my profit and walk away. CLNT. Okay, so yes, CLNT yesterday, because I did not chase. I buy an anticipation ABCD pattern. I see high low, and start picking up right. No, I didn't buy there. I buy when it right here, when I see high low right there. I see high low, so I buy at 720, and I could have sold. I should have sold to spike, because I knew there's a resistance right there. I've been caught in chat, and I see it holding it, and it doesn't move anywhere. I plan to sell it for 300 bucks profit, but then it's just drop on me, and I'm just sit there and pray it come back up. But yeah, it did not break my risk level. Even though it did not break my risk level, it did not have any bounce right there, and it's also bouncing under VWAP, which is a really bad sign. I should have sell it then, but I'm just scared that, oh man, it's gonna squeeze back up and I'm gonna feel horrible. So either way, I would feel bad. So yeah, I just hold it, and right when it break right here, I was like, okay, it didn't break that much. It probably bounced, which is did bounce, but I should learn better to sell into bounce instead of waiting to drop again. So I just sell it when it dropped below that point. So yeah, it bounced again. I should sell into bounce, not drop like this. But yeah, so yeah, that's another example. That's why I sell. Just take my profit when I can. And for people in our group chat, I see few of one person messaged me and saying that I ask them normally what their trading plan is. Their trading plan is like looking for 50 cents of upside and 20% of downside if they would cut their loss. That's not the right way to look at it. You gotta find a support level, and support level that where you can get out if the stock does not go your way. Because if you think about, if the stock only $1 and you want to sell it when it gains 50 cents, that's like 50% right there. The stock normally doesn't do that. Only in this market sometimes it does that, but normally it doesn't do that. And also another 20% downside, that's 20%, that's 20 cent downside, that's 20 cent, right? 20% right there. You do not want to hold through that. And one more thing, guys, you guys should always track your trade to see if you do how you do on that day, and what how you figure out what you're good at and what you're not good at. Before I track my before I start, I'm really lazy. I do not want to track my trade at all. But then after that, I just start tracking my trade. I don't want to write down too much. I just write down the minimal as possible before I try to write more. But then after that, I just be lazy and just write this much. But just track your trade as much as you could to find out what you do good at, and comment to see what you could improve next time. Read it at the end of the week or end of the day. Like, I find out short was not for me. Like most of this trade, I keep losing on short. So yeah, I completely cut that out of my trading for now until I can build up my account and can short it better. For now, I'm just longing, and it seemed like doing pretty well for me. Before, I did not even have any method. Like, for some reason, my method is like chasing right there. That's why I got minus. Or listen to Guru. That's why, just playing bounce. So I don't even play bounce anymore because it doesn't feel right to me. So yeah, I just try to narrow down to what I'm best at and try to increase, and hopefully that put me on the right track. Anyway, I think that in trading, you guys should find your risks before you enter the trade, and also like where you want to get off of when do you want to get off the trade. That's very important, because the thing is, a lot of people just go in the stock without knowing where their risk is, when they're gonna get out of stock, or when they're gonna get in the stock. You gotta find some like pattern that you guys like to play and stick with it, and like it's make sure it's fit your personality. Because the thing, before I tried to short, that's why I got all this short scan on my left right here, just seeing. But the thing is, it doesn't work out for me. I find that I lost more money than actually gaining from it, so I stopped shorting it overall. I'm just using it to know that what I do not want to buy, like all this right here, when it pop up like SRNE, you can see where my where this point at. Normally it point right there at 65, so it would be right here at 65. The stock then drop, and most people don't want to hold to that. I know it'll come back later, but then again, most of the time my scanner tell me that that stock will drop, that price at the end of the day will drop below the price when it alert me, which is at 2.65. Same thing as Linux. Linux show up right here. Let me see where. Yeah, show up right there. It did break out again, but once after it break out, it then come right back down. So yeah, normally if I see that, if I see it pop up on my reverse scan right here, I would not try to long it. The odds of winning is very, very low, and reward is very little, so I did not want to risk on that. And yes, I'll talk about my scanner in some other video, but yeah, that's what I think. That's how I normally trade. I'm recently just trading like that for 2 weeks now. So I just try to increase my learning curve. By no mean that I'm an expert at anything, but I'm still learning a lot and actually working out pretty well for the last couple weeks, 2 weeks now. So yeah, hopefully I can continue. Thank you.